Tether is proposing a merger structure involving 21 Capital and Strike, but the terms are still thin. Tether Strike Merger frames the pressure because the proposal sounds strategic, yet the missing mechanics make it hard to judge market impact. The supplied evidence names Strike as part of the structure and frames the move around accelerating 21 Capital's direction. The useful part is the test in front of the story, not a broad market slogan. Deal terms and governance details are the first confirmation points. That gives the opening a measurable checkpoint and keeps the story tied to named levels, named participants, named rules, or named product steps. The confirmed baseline is narrow. Tether Investments has proposed merger plans involving 21 Capital, and Strike is named in the structure. The available evidence does not provide financial size, ownership splits, approval requirements, or a closing timeline. This baseline matters because it gives viewers the part that can be checked before any larger conclusion is drawn. It also limits the story to the facts already visible. The proposal exists, but the deal is not fully mapped. The viewer can separate the setup from speculation. One side is the factual baseline, and the other is the result that still needs confirmation. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The mechanism is corporate consolidation rather than a simple token or product launch. In plain English, multiple entities can be combined or reorganized so strategy, control, and infrastructure change together. For Tether Strike Merger, that mechanism matters because the structure could matter for Bitcoin payments, institutional positioning, and Tether's investment footprint. The stress point is specific, whether the companies disclose who controls what after the transaction. This is the part that makes the headline useful, because it explains why one level, deadline, filing, reserve figure, integration, or data point can change behavior. The direct impact lands on Tether, Strike, 21 Capital, and potential institutional partners. The practical impact is limited until the market knows the role of each party in the combined structure. If the deal advances, it could signal deeper institutional consolidation around payments and capital market infrastructure. The practical consequence is the story is important, but the details still determine the weight. That is the viewer value here, understanding who faces the change and why the change is not the same for every participant. The effect is not evenly distributed, so the segment focuses on the group with the clearest supported exposure. The unresolved part is the missing transaction mechanics. The proposal does not confirm valuation, equity split, approval status, or final closing. That gap matters because corporate deals can change materially before completion when terms are not public. The cleaner proof would be a term sheet, formal filing, direct company update, or approval timeline. Until that appears, the story should be read as a defined setup with a real open question. That does not make the story smaller. It makes it cleaner, because the unresolved detail is exactly where risk can be misread. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The concrete signal to follow is disclosed terms, governance structure, and approval requirements. Those details would separate a strategic headline from an actionable corporate event. Tether Strike Merger becomes easier to read if the companies publish deal mechanics and a credible closing path. It weakens if the proposal remains broad without independent detail or timeline. The final readout is simple. The merger story is real, but the mechanics are the story. A strong next signal should be observable, not emotional. A filing, close, data release, official term, usage number, or liquidity change.